When you think about where to stick statistics in the audit process, I find that analytical procedures is where you want to put it. It is mostly talking about how we're looking at the data that we have, making comparisons, maybe doing ratio analysis of financial statements, taking a look at doing reasonableness tests and other calculations, other benchmarking to other data such as digital analysis, and then regression analysis, trying to figure out, is there a pattern, is there a relationship in our data, say number of employees to number of hours worked, that we can create here. And the AICPA has their standard analytical procedures, and it also walks through the various types of comparisons that you can make and how it can be utilized in the audit process, in the planning section of your audit process, as well as in actual field work. And it could be used as a substantive test as well. A lot of times, really understanding the business and putting that into an analytical can be far more effective than selecting a 5,000 unit sample to try to test a particular balance or process flow. Analyticals really assist in that fashion. And to help us along the way, I've created this Excel as an audit software white paper. Now, it's about 6 years old. However, it still has a lot of validity, and the techniques that are used still work within Excel. It's just a matter of it looks a little bit different today in the new form. This product was done a bit of a bet to myself of whether I could do it. And what I was trying to figure out was whether or not I could complete all of these tests, which are normal audit software tests that we perform, and could we do them within good old Excel? And sure enough, you can. I mean, you could do every one of these, and we'll take a look at that now. So quickly, I wanted to show you just one of the links that we showed before from the AICPA and analytical procedures that you can get on the web here. It does walk you through the use of analytical procedures, very high level. However, I really liked how it did provide some information as to how you can utilize comparisons and create expectations. And really what you're doing in an analytical is you're first setting an expectation of what you think the balance will be based on benchmarks such as digital analysis, Benford's law, or what it was last year, or what you're anticipating based on trends in the industry or just trends within that company. And really to help along these lines, and I want to jump quickly to this, a couple of products that I have used in the past and found them to be quite useful. One of them is called BizMiner, and another one is called Profit Sense. And both have their unique differences and benefits. And I going over to BizMiner first, they have quite a bit of information that you could utilize on the industry and apply to your particular NAICS code, which I think a lot of people may know this as a SIC code. It's now known as the NAICS code. But once you get that, you're able to put in some very simple information, and BizMiner will provide you with a host of analysis many years back to what your data said, and from an industry perspective of how you match up to others in that industry. Profit Sense does pretty much the same thing as far as I can tell. However, it goes a little bit further in that it has some products that are more geared towards an audit and review. So they talked to a lot of auditors and got feedback, and if you could see this, they kind of blur it out a bit, but this is an example analytical procedure worksheet where it's going through various income statement and balance sheet accounts and providing you industry information with relation to that NAICS code. And again, you can view sample here. We'll just quickly click on this, and you again get a lot of this info. What's also nice though is that Profit Sense has this ability to write almost like a Word document explaining how your data relates to the industry. And we'll tell you things like your weighted DPO is low in relation to others, and you might want to do something to increase your days payable outstanding, and maybe decrease your days sales outstanding. And they kind of provide this information. May not be that useful for analytical purposes, but again, it is very interesting to see these ratios and also see how they've put words around how the business could maybe be better if they utilized these analyticals a little bit more in their business practice. So again, I like these tools mostly because they're an industry type expectation tool that you can benchmark against. However, they do have some additional benefits as well. Now, jumping over to auditsoftware.net, this was the link that will get you to using Excel as an audit software, and I'm just clicking over to that product here. This is, again, written a few years back, but pretty extensive document, not that big, only about 30 pages, and it will walk you through, as I scroll down here, all of the different types of tests. It explains how to do a horizontal analysis, a vertical analysis, ratios, gives you lots of ratios to work with, trend analysis, etc., etc. And we're going to be walking through many of these today in this training, but I did want to provide this document because it really does provide, as you look at the table of contents, a good overview of everything that we're going to be talking about and more. And heading back to the presentation, I also find it interesting in that I do a lot of cost recovery and cost analysis to try to save money at companies. And these are normally the data files that I'll get my hands on initially to try to understand where is the spend going and also to build some expectations. And again, these are some of the data files: general ledger, maybe an invoice detailed distribution, which really is just taking the accounts payable data and putting it across the general ledger in this case. So it's kind of like the general ledger type work. But what I find is what's interesting is what we don't expect when we see this data, and how we can use some of these, if you will, analyticals in taking a look at data, but not so much from an audit point of view, now from a cost savings point of view. And, again, maybe to think of analyticals as I'm trying to here, to take it beyond just a normal, is this balance accurate and complete, and is the process controlled? You may even want to just go into, can we save money by using analytical procedures? And these are just some of the examples, just taking a look and finding accounts that aren't really expected to be sole sourced, but are. Maybe general ledger accounts that have too many vendors. Office supplies is a very common one that has quite a bit that have too many vendors. So that'd be the expectation. But as you look across the data, you may find many others that are popping up with lots of vendors, and you could consolidate that and try to get a better cost ratio really there. And again, there are other statistics here, but my only point here is hopefully you can take these concepts that we're going to be talking about and apply them across various other avenues within your audits, as opposed to just looking at these as kind of a financial statement audit test.